Hello everyone, on this video we're going to discuss about two stocks plus one REIT with great yields, great dividend yields and solid financials. From these two stocks, one I own myself and the other I don't, but I'm considering. And the REIT I also own myself. So with no more delays, let's start. And the first stock of the list will be USB, US Bancorp. US Bank is the fifth largest US bank when you talk about assets under management. A very strong, reliable bank with strong financials and a really nice dividend yield. US Bank is down 13% year over year. I own US Bank in my personal portfolio. I have 58 shares of US Bank. I'm already up 18% on those shares, with a dividend yield on cost nearly 6%, but the yield for who is buying at this current price is around 5%, with a payout ratio just below 6%, between 50 to 6%. Dividend yield growth from the last 5 years above 8%, and a very strong track in growing this dividend for 12 years in a row. If you see here, the average on the last 5 years, the dividend yield for US Bank is below 4%. And now you have a dividend yield around 5%, way above the 5 years average. And US Bank now I'm up to 18% because I bought when everyone was scared of regional banks. They were putting US Bank in the same basket as some bad banks that was breaking down, and US Bank was not even close of those cases. Actually, US Bank got stronger after those banks falling down, because stronger banks was seen for being more reliable. People are shifting money from smaller banks to more reliable banks, and US Bank was in the reliable side. And so it's historically speaking, is a very high dividend yield for the quality of stocks. You won't see very often US Bank with that high yield. Just running quickly through some financials. So US Bank, you can see some steady growth here on their financials, a bit slightly down in 2020, but it get picked up again, and we have a trailing of over 24 billions in revenue. And when you compare this with previous years, we have a yield above the 5-year average. But the revenue is way better than what it was 5 years ago. So that's what I like. Get a better price with a better quality. Perfect scenario. Although you can see here the net income, we have some reduced and net income. I believe through the high interest environment, banks benefit with that because they can pass this high interest to the customers, but also make it more expensive for them to borrow money as well. So, and reduce the demand for money. Like if your loans are more expensive, if money are more expensive, if everything is more expensive, you have less demand for your service. This low trend in the economy affects everyone, especially the financial sector. But for a very tough, let's say, environment we live in, I think US Bank has holding the horse quite well, and I believe myself as a shareholder that they will be doing well on the long run. The dividend yield is fairly covered. We can see here the current payout ratio is still below 6%, so I think the dividend is well covered, and I don't think that a dividend cut is coming anytime soon, especially if the dividends will especially if the interest rates start to be cut down from 2024. And just before we move to the next stocks in our list, a stock that I don't own myself but I'm considering to add in my portfolio, here I'm the dividend fire. At the moment 230 subscribers, so please, I highly recommend you to subscribe to the channel to follow this journey. Here I post all my journey. I'll be sharing all my progress on my portfolio here, 20K, 13K, 15, 20K, all this change on my portfolio, all the dividends received. I have monthly reports where I'm sharing every month everything that happens in my portfolio, new stocks, stocks that I buy, stocks that I sell, the money that I'm adding up my portfolio, even my current salary in dollars, I'm sharing with everyone, okay? I'm sharing everything here, so if you like this type of content, please, I highly recommend you subscribe to the channel to support us in this journey where I seek to retire as early as possible, and specifically in 10 years. I want to retire in 10 years. So to do that, I will need to be very aggressive, and that's where I'm going. So the next stock is PFE Pfizer. Pfizer is a giant on the pharmaceutical sector, research and development of drugs. Pfizer is down 43% year over year due to the demand dropping for COVID vaccines, and we also talk a bit more about it later on the video. So let's cover some financials about Pfizer, and on that we can discuss a bit why this is dropping so much in price. So let's first talk about top line here, revenue. So we can see the revenue was steady, would be growing but steadily. Wasn't nothing crazy. And then in 2021, you see the revenue basically double. That's because of the vaccines. They were the biggest one on the vaccines. And 2022 still was strong. They still was a strong demand from the vaccine. But that eventually in 2023 they slowed down. So because they slowed down, the vaccine was such a huge growth for the company that the shareholders got so like, what's that? Like, what a drop. But when you think this drop is still way higher when 2020, when they didn't have all the demand for vaccines, so it's still way stronger than the pre-vaccine revenue. Which is still really good, and the price is way below that what was a few years ago. So the revenue is way better, but the price is not. The price is lower. So that's a good point that I like to highlight here. Okay, it's not you won't have this COVID demand forever. That was a specific moment in time, but it's still strong and offer future potential. On the bottom line though, we see here that we actually a decline on the net income if you compare with 5 years ago. We had an increase there in 2019, a decrease again 2020, and then in 2021 we had a very high explosion on the net income, again because of the vaccines. Same thing in 2022, and a very sharp drop in net income 2023. But why the revenue was way better and the net income is not? Because they did huge acquisitions in 2022 and 2023, huge acquisitions from other pharmaceutical companies. So these acquisitions eventually will pay off for the company. So the company benefited for able to double their revenue with the vaccines. And now the vaccine is gone. This huge vaccine revenue won't come on the board anymore, but we still have all these acquisitions they made, have a strong prospects from the future. So that's a point that I like to highlight here. But not all is great. We have here a payout ratio have increased quite a lot when you compare how it was in previous years. That's because the company has been used a lot of the cash, a lot of the capital to make acquisitions, to reinvest in the business. So the money remaining there to pay dividends is lower. So I think that's quite high payout ratio. So I will be cautious here. But I believe that they will slow down the acquisitions for the following years. So I think they should have the payout ratio in better terms in the future, especially when these acquisitions starting to pay off. So they have a strong prospect. They believe they have a potential of huge revenues to come in by 2030, and way more than around 25 billions of potential revenue from the deals from BD. BD was one of the acquisitions they made with that huge income they brought with the COVID vaccines. So there's a strong possibility for the future here. There's strong prospect for them to benefit from huge revenues on the long run. But I do understand that this can be a bit more risky play if these acquisitions, the new drugs in the new drugs come in the pipeline doesn't go as well as expected. But I think there is very strong potential there for Pfizer. Pfizer also has a very strong, steady dividend growth of 13 years. 5-year dividend growth of around 5%, and is being reduced, so you can expect maybe even a bit lower for the following years. A dividend yield there above 5%, and the dividend you see is all-time high when you see from the previous years, like the 5 years average, they used to pay a dividend yield below 4%, and now it's higher than 5%, is way above the 5-year average. Is a long time you don't see here. You can see in this chart such a high yield on this stock, because Pfizer is a huge pharmaceutical company. They are very steady company, very strong on their business. One of the reasons for their being one of the most, basically the number one pick for U.S. government in regarding to the vaccines, not just U.S. government, but when you see the picture worldwide, is because the reliability. They are the most reliable one that they believe that could deliver the best vaccine or the best result. So this show like a sign that the company is very strong, very reliable, and is on the top tier of their category. And I think we are getting now on Pfizer a way discounted stock, because after the vaccine, but also they still way stronger than stronger financial when the vaccines came in place. So they have done huge acquisitions of that money they gathered, and still their value is still lower, below when they did this acquisition. So they have all these companies on board to launch new projects, to launch new products, and so I think the future could be bright and surprising for Pfizer. I'm highly considering to add Pfizer to my dividend portfolio, especially if the stock is still on this current price. But is a delicate stock, is pharmaceuticals is not easy to analyze, so I still going to dive in more on this stock to learn more about it. And please, you also do your own research before investing in anything. Don't take this video as financial advice, because I'm not a financial advisor, so please do your own research. I'm just sharing my experience in what I'm doing here, okay? And now the REIT of our list is Realty Income, the monthly dividend stock. So I own a lot of Realty Income, at least for my portfolio, that's a lot. So I currently own 150 shares of Realty Income. I took advantage when the stock was being hammered and everyone was losing their shit about, oh my god, the Realty Income is not the best stock in the world anymore. I thought to myself, no, it's still a lot of value there, and people are just losing their shit, because that's what the herd do. When stocks go down, they forget that stock was good, they forget everything, and they just follow the herd. If everyone is selling, they're going to sell. So I took advantage of that, and this price started going up already. I'm already up 6%. But I still think the stock is of great value. My yield cost is 6%. When you see the 5-year average, the dividend of Realty Income is around 4%, and sometimes is even lower than that. It's a great yield for the moment, even with the recent increase on the price of the stock. And when the interest rate goes down, the stocks probably will go way higher because it's a very strong, here the Seeking Alpha is saying 25 years dividend growth, but they have been increasing at this point already 30 years without no stop. 30 years invest, that's a lot. Then they have been increasing their dividends as well, like every quarter, so they are just killing it. A payout ratio there when you consider the use of FFO instead of earnings per share. So we have around payout ratio around 75% for a REIT. That's good. A 5-year growth rate is not lower, but for this high yield, I think you can do a nice number there. You can get some 10%, which is nice on my point of view. And also, I think you have the upside because the price, I believe the price go up. When the interest rate go down, such a reliable and strong dividend stock, very strong track record. For the high yield at the moment, I would say it's a fairly dividend growth rate. It's not the biggest, but okay, I'll take it. And when you join all that, and dividend and Realty Income is always, I've seen that all the dividend investors always talking about Realty Income like it's the gold standard. But then when the tide is low, people like to run with the herd and run away. And that's where the real shareholders will take advantage to increase their positions. In the long run, at some point, Realty Income will be back in your good days. Dividend yield will be probably around 3-4%, something like that. And those people will be buying like cycles on Realty Income, and I'll be just enjoying my monthly dividends from my stocks. So I'm buying as most as I can. Since my yielding cost now is around 6%, my average price is 51, and the current share price is a bit higher. As far as it's below $60 there, I still consider a good price, but that's my opinion. You do your own research and do your own. I'm just sharing my own experience just to be aware. You can see the revenue here, like we have a dividend yield above the 5 years average, but the revenue, we have a way higher revenue than 5 years ago, way higher. So that's nice to see. But when you talk about the REITs, it's good to see the FFO. So we see here the FFO 5 years ago was a way lower. We have more than double, nearly triple the FFO when we talk about the trailing in the last 12 months. And still the stock price is down. Still the dividend yield is higher, and everything went up. They still paying they still increase their dividends, and still you can get it cheaper. So you get better, you get it cheaper. That's what happened with Realty Income. That's why I love to take advantage when I can. Even the payout ratio, you can say that their dividend is safer than was before, because the FFO payout ratio is coming down when you compare with the previous years. So that is amazing. I love to see that happen. And there are some concerns about this current acquisition they did of Spirit Realty. So some people, they have to they didn't want to borrow more money to make this acquisition since the interest rates is a very high moment. So they issue new shares. So people are concerned, okay, they have increased everything, but the shareholders diluted, they issued more shares. But even if you see the per share, metrics is still really good. FFO per share diluted, so it's still higher from the previous years. It's still way higher than it was 5 years ago. So it's still on the per share basis, it's still really good, and that's I love to see. So that was for today, guys. 2 stocks plus 1 REIT, great yield and solid financials and very strong track record. And that was my thoughts, just a fast video. So I highly recommend you to subscribe to the channel if you want. I continue to bring this type of video here in the channel. And please leave your thoughts about those stocks in the comments, or if there's another stock that you have your eye on and I didn't cover it yet, please leave in the comments. Who knows, I can have a look. If I found interesting, I can bring it to the channel, okay? I'll stay here. See you next video. Bye bye.